Here's a look at the emini S&P through the eyes of emini day trader for Wednesday, January the 11th, 2012. What we're looking at here are the market profiles, and this is what occurred today. This is what occurred yesterday. The one in the middle here is what occurred overnight. So the low from yesterday was, we had said that it could possibly find some support there, but we also said that it could certainly dip into that area of the gap before it could find some support. It did come all the way down to 79 overnight, hit a low of around 81 during the day, and then had a fairly strong close. So, the up auction is still in place. It's just a question of finding a good place to get long, at least as it stands right now. Now, tomorrow we'll have to be on our toes because the jobless claims numbers will be released at 8:30 a.m. Eastern Time. And along with those numbers, there will be the retail sales. 10 o'clock business inventories, and 2 o'clock is the Treasury budget numbers. So some important numbers certainly at 8:30. Business inventories traditionally is not all that much of a market moving number. So we're looking at right now probably in the 84 area of support, and then all the way down to in the 77 range. On the upside, we're still looking at 89 as resistance, and then above that there's really not a lot. So some good room to move should the market find some good buying come in. We also like to take a look at these profiles, and now these are just the day session only, and we also use them in our analysis. And when I say our analysis, I'm referring to an analysis of the market's condition from a day-to-day basis. Here is our software. It's an add-on for NinjaTrader. These are the NinjaTrader charts we're looking at. And we had several trades today, quite a lot considering the day's range was only, I believe, around 8 points. And when we have a short trade, there's a down red arrow. So you can see several of them here. We had several short trades set up today. As you can see, though, we only had a very short period of time, a very short window here that our intraday filter, that is within the daytime frame, was confirming that it would be okay to take a short trade. So we did not take any of those short trades as a result. The trades that we did take were the long trades, and this first long trade was an entry here, but we had the red filter. We were not butted up against a barrier, so as a result we did not take that one. However, later on when the market started to have a bit of a rally, we unfortunately, this area down here, this large green patch, once it had formed, and it had formed right at this time frame here, we really knew that this area would likely be a good support area. So we were looking to get long in that area. We did not get a trigger, unfortunately, until the market got up here. So we had a long trade in there, which ended up actually losing a tick after being into it for 10 minutes. So that was, a little bit unfortunate. These short trades that were in existence today, a couple of them could have been taken on a more aggressive basis, because as you can see on some of these short trades, for example, this short trade that was entered right here, it had a nice little dip to it right there. Even this short trade right in here had a bit of a dip. This short trade, well, it went up and then basically came back to the price, so it didn't have a lot going for it. This short trade did not. Obviously, it moved up higher pretty well right away. So this is the main reason, obviously, why we have the filter is for the intraday bias. And if we don't have 2 out of 3 going in our favor, we could still take the trade, but we know if we're taking that trade, we really want to make sure we've either got very strong intraday structure or very convincing intraday directional move, in which case we would then take the trade with the direction of the intraday market. So intraday directional bias. So that's really what happened today. Not a very exciting day. Fairly, low activity. You can see that it had a good march higher there, climbing the so-called wall of worry as it moved its way up after the initial kind of sell-off. So that's what we're going to be looking for in the 84 area to try and get long, if not maybe even a little bit lower, maybe even down in the 82s. If the market can get down there on a reaction after the news would be a likely scenario on something like that. So market is still looking good from a bullish standpoint. So I guess that's kind of the bottom line here for today. Any questions or comments, you can reach us at info@eminidaytrader.com. So don't hesitate in contacting us. So that'll be it for today. Thanks for watching, and we'll see you again tomorrow.